And you know what that means. We are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time. Start with the market skyline, look at the indexes, commodities, currencies, Bitcoin, break down individual company news, especially like right now when we're in the middle of earnings season. There's a lot to round up right there. And then have some fun while we're doing it. Talk a little bit about trading ideas towards the end of the show. And we are back. Welcome back to our show. If you're a veteran of the community, you know what to do right now. Hashtag Team Tackle right in the chat. Give me a like, a subscribe, and a bell if you are brand new to the channel. Make sure that you come back and join us. We go live each and every day at 12:30 Eastern whenever the markets are live. Wednesday, Coach Tyler's back. Tyler, how you doing today, sir?
Doing, Tim, I'm more awake than the market. I'll tell you that.
Market's sleepy right now. Yeah, it wouldn't be hard, by the way, brother. It's a tightest two dojis I've seen in quite some time, right in front of this FOMC meeting. Matt, how you doing today?
I'm right there with the market. I think I'm ready for a nap. Nah, I kid. It's a more interesting market from a news perspective than it is a technical perspective. It's been a very boring last 2 days in the market.
For the broad market,
a lot of fireworks in the market itself, though.
Mm-hmm. Yeah. There's a lot to break down.
A little bit of up, a little bit of down, a little bit of doji in the market.
You know, I'm going to have to bring my eyes closer to the screen here, Tyler, to see that doji as we zoom in. We'll get down to technical analysis here in just a minute. I'll get all you guys' read. We can talk a little bit about the Fed here later today. There's not much to anticipate. We'll wait to see if there's any fireworks from Jerome Powell. Matt's got earnings roundup. And then Tyler, I think later in the show, you've got a stock idea for us, and you're going to find two different ways to trade options on it in our segment we call Jedi Options, right?
Indeed. All right. I've been meditating all morning, and I am prepared.
A Jedi, do you meditate, or are you just constantly in a state of meditation? I don't know. You're the Jedi, not me. I would love to learn from you, my friend. But before we go too far into market analysis, head over to tackletrading.com real quick. I do want to just quickly promote our new podcast that we've been promoting and producing over the last month to help save people time with their daily routine, get them the news quickly and efficiently, called The Huddle. And Matt, The Huddle here is the real value of this product. Is it does save people time on a daily basis. Get all the news directly from us each day so that you can get right into your trading routine. Talk about The Huddle for just a second if you can there, Matt.
Yeah, it's just like you said, Tim, it's a great way to stay on top of the market in a very short time. And like everybody, everybody's getting back out there to the real world to a certain extent. And their time is precious. And, we want to respect that. And The Huddle is a fantastic way to stay on top of the market from a 64,000 foot, level to see kind of what is happening in the market on those major news stories. And you're going to get an unbiased, read in that. And I think it's a wonderful product, and I hope people enjoy it.
Out there at Team Tackle, if you've not done it yet, make sure that you put The Huddle on download. Go to your favorite podcasting app, subscribe, click the download button. Let's get some traction on this thing so that we can get some other people out there, some visibility into our community. I think it's going to help a lot of traders out there save some time in their daily routine. So I'll drop the link in the chat. Let's get into market analysis here today. Back on the charts here for a minute. And let's start with you, Tyler. What are you seeing technically in the S&P 500?
Not a whole lot, man. Not a whole lot. Look, in defense of the market, it's run quite a ways so far this year, and you don't get gains after gains after gains after gains. It deserves a bit of a rest. I have no problem with it chilling out here a little bit. I think it's just searching for the next catalyst. I mean, earnings have been, as we'll talk about here in a bit, just kind of mixed. We haven't had any major blowout responses to earnings. Maybe we had good numbers, but the market reaction has been muted. In a parallel universe, if we had Microsoft gapping up and Google gapping up, 7, 8, 9, 10%, this would be a different story. But it just seems like the market did a really good job of pricing in the good earnings. And it's like, look, man, I already did my job. I'm not giving you any more for the time being. Come back next week, maybe I'll give you some more gains. But one takeaway could be this is a lesson in market efficiency and how sometimes the market prices things in pretty well. And it seems like it just doesn't want to give it any more in the short run.
A couple of dojis heading into the Fed meeting this week, Matt. We've had a roundup of very, very key companies that reported earnings just in the last 24 hours. Microsoft, Google, AMD, among others. And the market is dojing up here. What is your read on the price action?
Well, just a couple things on what Tyler was talking about. In regards to earnings, there have been good numbers. You take a look at Microsoft here today. Microsoft reports a beat on EPS, an official beat on revenue against expectation. Revenue increases 19%. They slightly increase their revenue guidance. I mean, that's a beat and a increase in guidance. You got to like the raw numbers, but yet Microsoft, gaps down 3%, holding the 20-day moving average right now. So, it's interesting that Microsoft comes down on the day on those types of numbers when I've seen many times Microsoft get gobbled up on those types of numbers and, buy. So there isn't anything in the numbers that isn't good here. Like the raw numbers, this earnings season is going to be one of the top 3-4, in my opinion, according to FactSet, since they started, reviewing earnings back, post or during the pandemic, not pandemic, but during the subprime market in '08. So we've got about 13 years of data in earnings on FactSet, and this earnings season is going to be one of the better ones out there in that time frame. And so the raw numbers are really, really good. But again, I think what you're seeing a little bit is simply the market has been pretty good in the first quarter of the year. You've had really good price appreciation in the first quarter of the year, and you're seeing a little bit of profit taking, a little bit of a mixed response on the actual numbers. But earnings itself has been pretty decent. I don't think you can, as an investor, I don't think you're carrying one iota about these numbers.
Well, and then one thing about the earnings reactions, like you mentioned, Microsoft and Google, I know you're going to do a full earnings roundup later, but even the ones who do slip or fade on their news, and we saw this with many different names over the last week, they're within the expectations of what the market makers are setting. And so it seems like, honestly, guys, it seems like things are being priced in pretty efficiently in terms of earnings responses and reactions, and the market scoops up the ones they like and they sell off the ones they don't. But I'm not seeing any catastrophic gaps or anything.
No, not at all. I mean, the Microsoft situation, I don't think it's concerning in any capacity. You look at those numbers, and those numbers are perfectly fine, and you can certainly understand why somebody would be locking in profit. But again, a trend wasn't violated. Patterns, maybe the pattern on the high base was violated on Microsoft, but the trend was not violated. You're now looking at this as perhaps finding a support level. Maybe that's at that 20-day moving average on Microsoft. Maybe Microsoft comes down a little bit deeper into the previous breakout channel around 245, right where that, slow, methodical 50-day moving average is. And I think, Tyler, I mean, if we got that, wouldn't everybody sign up for that?
Well, and that's the thing. I mean, if you were in Microsoft, it had room to give some back.
Oh, absolutely.
If you weren't, did you want to have to chase another gap up? No. I mean, so I think there's a lot that you could be happy about with this response.
And so a lot of the earnings numbers I've been seeing on this has just been a little bit of profit taking because we've had a really good quarter. And then you have the Google today that just stands out. Google's numbers just stand out on top of others out there. You're seeing a company that came out and reported $26.29 per share. Guys, the expectation was $15.66. And so not all beats are equal, obviously. Microsoft beats a few pennies. Google destroys their expectation. You can certainly understand why Google bucks that trend a little bit of profit taking at the top end of the chart, given the fact that they destroyed their expectation. And then they came in at about 8-9% on top of their revenue guidance as well at 55.3. And that revenue exceeded the expectation year over year at 34.4%. And so you had a very similar scenario playing out technically on Google and Microsoft, both towards the top end of the chart, both kissing up against that high base. Google destroys their numbers, gaps up. Microsoft beats theirs a little bit, justifies the trend, justifies what's been going on, but sees a little bit of profit taken. And I think both in a bubble, both is completely understandable.
hmm and the thing with Google that always impresses me with their numbers, the EPS number was just an outstanding blowout beat, Matt. Like you talked about, for a company this size, that's incredible if you think about it. But their revenue just always impresses me. It's just a reminder of how much money this company actually just brings in from different services and segments and whatnot. We'll break down all the earnings numbers around all these companies. But what did they post today? 55 billion or some crazy number?
$55.3 billion out of Google today.
Tyler, there will be a day in your future where these companies are posting $100 billion quarters, all this kind of stuff.
Yeah. And that means Apple's posting 170 billion and Amazon's 140 billion. And oh my goodness, I couldn't imagine what Walmart's numbers would be like.
Raw revenue numbers are pretty
300 billion a quarter.
At some point they will. Yeah. I mean, just the growth in front of these guys is incredible.
The number one growth you got to talk about is the growth in inflation and money supply and all of that. But yes, you are right, Tim.
Do you think the Fed will talk about that today?
I think the Fed doesn't want to talk about that at all.
I don't think they'll talk about that.
I don't think they want to talk about inflation at all. I don't think they want to say the word transitory again.
No. How much practice do you think Jerome Powell has on his Q&A session beforehand?
Oh my goodness. He stares at himself in the mirror for at least 48.5 minutes. Just asking himself questions. How am I going to respond to this? This is how I'm going to respond to this. Tiger face, everybody. Tiger face, everybody. Yeah, J. Powell does that.
Tiger face. Yeah. I don't know what tiger face is. Is that a
Tiger King?
Oh, okay. All right. Yeah. I was wondering if it was Tiger's blood. Charlie.
No. It's the combination of Charlie Sheen and the Tiger King.
I got you.
That's what J. Powell does in the mirror as he gets ready for that hard hitting press conference he's going to get today. I just don't understand how he's ever going to get through those types of questions.
Yeah, the softballs that the reporters from Reuters show. Are you going to watch this one live again, Matty?
I like to get punched in the face, so yeah.
Why not? Why not? I might be AFK at that point. But I'll tell you, we got to go back to the markets here for a second. We'll do earnings roundup when we get into stock talk here in just a few minutes. And Tyler, the S&P obviously is the one we always start with because it's got all the broad, reflection in all of the different sectors in it. But can you run me through just all four real quick? It should be a very, very short exercise. Not a lot there, but run me through the indexes if you can.
You're seeing a little more movement in NASDAQ. And now that I say that, 0 versus a 0.25%. But hey, it's all relative. It is a bigger down move. I mean, you had more earnings out of tech, right? I mean, there was some heavy hitters in tech, so it makes sense that you got a little more volatility there. Nothing to hate. I mean, look, it's just basing, it's consolidating NASDAQ where it was 2 weeks ago. It's allowing the 20-day moving average to catch up. Look, Cinderella story here would be you get Apple blows it out, Amazon blows it out, sparks a breakout in the NASDAQ, and you get a push over the what is that, 14,055, 14,060. I mean, that would be nice for bulls. That's what you want to see. Who knows if it'll happen, but I think that's your next event. That's your next trigger for a pattern resolution would be the breakout. Until then, any kind of back and forth is just whatever.
Well, and that's the thing with a week like this week, when you have so much out there, sometimes the market just waits till all of it comes out before it wants to take a move one way or the other. And so when you're talking about Microsoft and Google today, and then the Fed, Amazon, and Apple coming on the back half of the week, that's just a tremendous amount of information coming into the market. And again, just sometimes the market wants to digest all of the news. And so I do think there's going to be some of this coming after Apple and Amazon, after the Fed. Now let's take a look at what this week really was. Instead of us highlighting every single component of the news this week, I do think this is one of those weeks where there is so much. After the week, we're going to take a look at exactly what transpired this week, where the market mentality is, after reading Microsoft, Amazon, Apple, Google, Facebook, all these other companies and components that are reporting this week. It's just one of those weeks where there's just so much out there that you can certainly see the market saying, let me take it all in first. Before I take an aggressive, directional
Overreaction.
posture. Why don't I see the Fed first before I overreact to Google's news? After the Fed, let's see Amazon and Apple. Let's just see those. They're really close. That's the market mentality. Let's see it all first, and then collectively, let's see where this market's going to take that type of news.
Yeah, there's still a bunch in front of us. I mean, President Biden is speaking tonight about his plan. He's going to be proposing to Congress as well. You've got the Fed, got all those earnings roundups you've been talking about. We're only here on Hump Day on Wednesday, and there's still a lot of stuff in front of us we got to digest. And yes, Tyler, I like those lines. Every trader likes a tight consolidation at the top of the range, in my estimation.
As long as it stays consistent.
Yeah. And I like him for now. We'll see how the markets continue to react as this news comes through. The Russell you were bringing up here now, and obviously it's come back up and pushing towards this little resistance point right there, Tyler. What are you seeing?
Right when I pulled it up, it was 0.00. About as doji as you get, but I do like the strength you're seeing in small caps. If you look at it over the last 3 days, that where the other indexes have been chilling, going sideways, this actually has a decent rally over the last couple of days, broke above a little mini resistance zone, and holding up okay. Again, I think this is constructive. If you're a directional trader and you're just kind of impatient because the indexes are just doing nothing, go look for individual stocks that are running. There's earnings on a lot of companies that's causing increased volatility, but on the index level, you're just not seeing a whole lot. It's a theta day. It's a theta week so far. I think this is fine and constructive. So this does nothing to change the overall constructive nature of small caps here.
Yeah. Anything for you on small caps, Matt? That level.
No, the 2800 level. The 2800 level. I do think you got to keep your eye on technically. That's the left shoulder break back up above, and technically we have seen that be a fairly good directional position to be in the market post-pandemic, when we've seen potential reversals. When they have violated the left shoulder in a reversal, they have been typically they have been fairly decent trending environments. So keep an eye on 2800.
And I'll have
2300.
The pick I'm going to have in the options Jedi segment will kind of go hand in hand with small caps awakening with a breakout. So stay tuned for that.
Small caps, it's got to be industrial, economy opening.
Could be a bank. Okay. There's a lot of financial companies.
Energy, industrial, bank. Energy, industrial, bank.
I like it. I'm
that fits his mid-cap love. Like, is there anybody that loves mid-cap more than Tyler?
Tyler is the mid and small cap dude. There's no doubt about it.
That's just where
he's the perpetual underdog. He's always felt like he's got to claw his way higher, right, Tyler?
I'll buy it. Sure. Yeah. Whatever you're selling, I'm buying. Yes.
Why not? All right. Let's flash you with commodity markets next here. Crude oil actually having a pretty decent little day after a couple of bits of news around it. They had supply come in, was in line pretty much with expectations. Small build instead of a small draw that they thought. That didn't do much for it. But even OPEC decided they're going to delay some of their decision making on production further out down the line. Didn't have much to say. They actually kind of postponed their meeting they were planning on yesterday. But crude is now threatening a little bit of a breakout on that pivot here, Tyler. Tell me what you're reading in that chart.
Look how respectful this has been to my lines, right? If this was my kid, I'd take him out for ice cream. I'd say, you're so well behaved. You got to like the follow through. We talked about this too. I remember Matt talking about the little higher pivot low here. It's good, man. It's good. Well behaved. I like it. It's constructive. You're above the moving averages. You're in the upward sloping channel. Look, man, give me a run up to 66. Let's test those highs again. But there's nothing not to like here.
Everything around energy and oil analysis for me this week starts with Exxon and Chevron, who are reporting later in the week as well. So I'm eagerly anticipating those two, as well as many of the names we've seen, but I really want to see what happens with those two companies. All right, let's keep moving through. Let's go on to gold next, if we can, and the GC contract. Healthy development through the pivot points over the last couple of months. We've been talking about it. Here we are, a little hammer candle on the near the rising 20 period SMA, I should say, and just in the same kind of technical pattern that we have seen. Tyler, anything you've seen in the chart that stands out?
Yeah, I think you got to be pleased by this, right? we pounded the table on gold on the double bottom all the way up, and then it gets a little extended and starts to come down, and it's like, all right, like, are you legit, gold? You serious about this, or are you just going to crumble again? And so any kind of constructive pause and hold of support here, you've got to be pleased, right? You've got to be pleased. I'm happy buyers showed up on the dip so far. I don't want to see this go below 1750. I think it'll make the pattern unnecessarily messy. And you can look too. Tim, I was looking at GDX, the gold stock ETF here, and look, they bought the dip. They bought the dip. So far, high marks from me on the gold space, and it's behaving very well technically. So if they want to make it easy to make money, you'll see a nice bounce off of this support zone.
Maddie, anything you want to add to gold? I think we're good there. Let's move on to the dollar, Bitcoin, then to stock talk.
Hold on, I'm here.
There you are.
Yeah, that was a quick trigger. No, I just want to say one thing, because I certainly agree with Tyler on the technical read of it, and GDX, the gold miners being gobbled up at support early on, and it is early. We haven't seen confirmation yet. Is obviously supporting technical,
Yep.
read to the entire pattern and trend in what's happening in gold. The only thing I will say today is the one concern I have is the grenade that JPAL could lob here later today. And so that is one of those scenarios. I'm actually more concerned about what Powell has to say and its impact on this trend developing in gold than its impact on the market itself.
Interesting.
Do you think, I have a question. Do you think that the Fed, when they look at how they want to position themselves, they definitely look at like industrial commodities and things that are more economically sensitive. How much input do you think the chart of gold has on their policymaking / just the way they couch their language?
I think the chart of the dollar first, the chart of the S&P number 2, and then the chart of gold 3. When it comes to the importance of what the Fed does from a price action perspective. And they say price does not play a role in their decision making, and we all know that's false. And so when it comes to the S&P, the ensuring that the stabilization of price is very, very important to the Fed. And so I do think they're looking at the S&P number 1, and they do certainly take into account what the S&P is doing. The dollar and its impact obviously is going to play a very big role in the Fed's thinking. And since the dollar is number 1 in the Fed's thinking, obviously gold being, the cross against the dollar is going to have a big impact. And so, the dollar's sitting here fighting for support here. It's going to be interesting what the Fed says. And if the Fed says something that the dollar takes negative, gold could take off. There's no doubt about that. But let's say the dollar holds support and and buyers step in based on what the Fed says, that's going to be a negative to the gold chart. So this is that one key moment where I'm a little concerned that a news event could blow up a very good thing happening on gold.
Good point. Yeah.
And then last one here, guys, is Bitcoin before we get into stock talk. And Bitcoin, Matt, you had mentioned earlier that the SEC announced they were delaying some ETF approval process. It was kind of like maybe it was just moving it back a few weeks or something. What's going on?
A bank applied for an ETF based on Bitcoin. They have 45 days to either approve it. The SEC basically extended the deadline on that 45 days is what they did today.
Mm-hmm. Yeah. Well, here's the thing about the chart, the price action right now. So in my opinion, that's an ugly chart in the short term. Tyler, we have a violation of moving averages. We have a potential, even a pivot, lower pivot low, but you are in the middle of a range. That doesn't make it bearish, but in my opinion, it still is kind of a messy or ugly chart. Matt, what is your read here on Bitcoin?
A lot of people on Bitcoin people on Twitter being like, oh man, we're right back up to 55K. And I'm going to be like, don't tweet that. That's too soon. That's too soon. This is a bearish retracement with slowing momentum coming into some fairly important resistance zones right where those moving averages are. And like I said yesterday, I'm going to maintain that. I would not be surprised if we're back up at 65. But if I remove the name of this instrument, BTC, from this, and I'm just looking at this technically, I promise you, any technician would have a downward movement projection.
Yeah, absolutely. Tyler, confirm? You agree?
Yeah. I mean, it's a tough buy here because you just don't have a good entry point. And so you just need time. You need more pivots to form if you're really going to pitch this as a good short-term trade. I mean, it's not like you can't short this stupid thing anyways. I mean, you could.
But you don't short it.
There's no trade.
No. When it doesn't have a buy, it just means there's no trade.
Exactly. So there's just no trade. It just needs time.
Yeah, it does. It's messy. There's no short-term trade there. And that's our market skyline. And we're going to move right into stock talk right now. If you're out there watching the show right now, it's Wednesday. It's hump day. I used to do this more. I'm going to do it again right now. Where are you watching from? Are you in the U.S.? Are you international? We got our friends from Canada. Just type in what city, state, country, whatever you want to say. Where are you watching from the show right now? And if you are brand new to the channel, make sure you do click that subscribe button so you can come back and join us. Matt, today's stock talk is really simple. It's earnings roundup across the board. We've got Microsoft, we got Google, we got whatever else has caught your attention, because there is an entire, it's like you had a buffet today, Matt. You could pick whatever you wanted to pick to put onto that plate. So what do you got there, my friend?
Well, we got a lot, which means we're going to rapid fire style this earnings roundup here today. We talked a little bit about Microsoft and Google here earlier in the show. Let me just kind of go through their raw numbers and get Tyler's technical read, as we like to do when Tyler's here. Microsoft comes out with the B2B and an increase in revenue guidance. Raw numbers 195 versus the expectation of 176. Revenue did top at 41.7 billion versus the expectation of 41. That increased 19.1% year over year, and they also had a slight increase in guidance. Tyler, I got this as a failed high base breakout at this point that needs some time to really understand the next technical move.
I would agree. I mean, some gap candles give you easy entries. Others basically tell you got to pause, and this is a pause for me.
It's a pause for me as well. Let's move on to Google. Google comes out today and just absolutely annihilates EPS numbers at 26.29 versus the expectation of 15.66. Revenue came in high as well at 55.3 versus the expectation of 51.4. Revenue did increase year over year by 34.4%. Tyler, very similar to Microsoft, was a high base, little fade action, gapped up. Challenging environment. I want to see I want to see if that gap fills. I want to see this. I want some time. What do you think?
And you probably want, I mean, you'd prefer it too, because how do you not buy dips when this has the fundamental strength it has? I agree. I think it's a pause. And Doji lore tells you a Doji candle is a pause. So one other thing on Google that I think is interesting is the market had it right. Back in February and March, remember, tech stocks fell out of favor. Google didn't budge.
Market had it right. Good
well
call.
done. Well done. They didn't sell it, and they're getting rewarded today. So you got to give credit to the traders who kept it up. Yep.
Love it. Love it. All right, let's move on to Texas Instruments, TXN. Texas comes out with 187 versus the 156 expectation. Revenue did come in at 4.3 billion versus the expectation of 4. Revenue increased 28.8% year over year. They did increase their guidance to a higher ceiling. And if you understand guidance, what they did was just expand their top of their range on the guidance. That's all they did.
Is that the new trick?
I saw it a few times today. Listen. They don't have new tricks on earnings. They just hit the refresh button on the tricks they were doing like 3 quarters ago. They don't have an in-depth trick book on earnings. They have the same trick. Let's slightly increase guidance, or let's widen the ranges of guidance, and then let's put our expectation 5 cents higher than where it was. All of it is just to trick the algorithms. But here's the thing. It doesn't work anymore. They need to stop doing it. Like, the algorithms have caught up to it. They need to figure out new tricks. But yes, Tim, they did do the trick. It just didn't work. So
was it kind of like, Matt, I'm going golfing with you today, and I project that I'm going to shoot somewhere between 18 to 22 over par for an 18-hole course. But then tomorrow I
How many
decide,
mulligans you get?
Plenty. Don't worry about worry about the detail of this analogy.
All right.
But tomorrow, no. I expect to shoot 17 to 22 over par. So it's still within the same range. They're just subtly adjusting the numbers to make it look like they could improve if they wanted to.
And see, somebody might come out and be like, if they didn't know you,
yeah,
they'd be like, wow, Tim expects to be better tomorrow. And then somebody who does know you would be like, yeah, but he only had 2 extra beers.
Right.
Like, yeah, we know the trick because we know the companies.
That's right.
Okay. So let's technically, Tyler, interesting 180 number, gobbled mess technically. What's your read very quickly?
So this one's more intriguing to me because it's at an interesting technical point.
That's the price threshold, right?
Yeah. I mean, it's like, what, you want to bet this is the top? Forget it. Every dip has been a buy since March, and it's got a nice retracement. So I think eventually this is a buying opportunity. I think the tricky part is, again, what's the rush, I guess would be my thought.
What's the rush? There's no rush.
I don't think there's a rush.
The 180 number is interesting, and the weekly chart is interesting, but weekly charts, you need the week to finish.
Yeah.
Right? You need the week to finish. So let's see that finish. And I agree with that. What's the rush?
Let's move on this one. Go ahead. One thought on this one. Here's another example where the market, even though it is down, was within market maker expectations.
Everything's within market maker moves.
I mean, they're efficient with these numbers lately, guys. They just have been. Now, that doesn't necessarily mean it will continue, but for this season, I've been seeing that a lot, Matt. Even when they are off, down 4%, TXN can gap 4%. That's an MMM projection for a stock like TXN. So anyway, next one.
Like it. I like it. Whoever's doing the market maker move, the EIA should hire them to do their energy projections. They've been fairly accurate this quarter. Give credit where credit's due. AMD. Let's go to AMD here. Stay in the same space. I want to get your technical read here on AMD, Tyler. But raw numbers came out. Raw numbers pretty decent. 52 cents versus the 44 expectation. So a beat on EPS. They also beat on revenue at 3.4 versus 3.2. That increased 92.9% year over year. Very good raw number out of that year over year. They also increased revenue guidance here. That's what the gap was. We got some pretty aggressive selling post-market open here, Ty. Give me your read here technically.
Yeah, this one's tough. I mean, this is a bearish engulfing candle, very big bearish engulfing candle. Sure as heck don't want to short the thing. It needs time to cook. I need a new setup. It's like, what am I going to buy it right now? I mean, why? I feel the same as Texas Instruments. What's the rush? I need a few more bars to give me some kind of setup.
All right. So Texas Instruments, AMD. Right. We both need a little bit of time. We both like the price threshold they're at. Right. Mm-hmm. If you were to give me this technical setup, but over a week where it dings 88, 89, establishes a new high, slowly, methodically comes back down into 84, 85, you'd be signing up all day long for that because you love that price threshold, right? You love that support zone on AMD. Especially on the backs of that reversal pattern, coming back down to reestablish the support on that very clean resistance. Texas Instruments weekly chart looks really, really clean as well, as long as it maintains, once again, that very key price threshold, right? So we're really looking for the market to play a little defense, both on Texas and on AMD. AMD is kind of my pick, my thing, but I love AMD, right? And I know AMD like the back of my hand. Yeah. Which one technically, though, do you think is in a little bit better scenario that if we do see the defense play out, where you see an opportunity in the near future? Is it AMD or is it Texas?
I like you. I'm always partial to AMD, but I that aside, I would still pick AMD for the primary reason that this just completed a bottoming pattern. Mm-hmm. And so, and it's been out of the game. It has not been participating in the growth in semis all year long. I mean, this has been down all year long. I like it coming out of the base, feeling like there's less fluff maybe in the stock versus Texas Instruments, which has been trending higher. So I like them both, but I think I'm partial to AMD.
Okay. And then the third semiconductor we had here today, because everybody has their top 3, 5, 10 semiconductor companies.
At least.
Let's come with Maxim here, MXIM.
Doesn't that say something though about how good of an industry it is? You're such a good industry that you can create.
Name me a better one.
Really good public companies that all have great earnings. And it's a big enough pie. It's a big enough pie where they can all make good money.
Well, that you have your growth high value that can fly like AMD, and you have your conservative blue chip that you can do covered calls.
Yeah.
Like it really is. It's a very well-rounded industry group, but I think it's 1A out there in the marketplace. MXIM here, a little bit different technical read here, a little neutral over the course of the last 3-4 months, hasn't really participated in that price appreciation, but has a fairly decent horizontal resistance level. Keep an eye on Maxim. Their earnings numbers very similar to what we saw in AMD and Texas Instruments, a beat and a beat. You got 82 cents versus the 75. You got 665 million versus expectations 639. Revenue increase 18.4% year over year. So it's very similar to what we saw with the Texas Instruments beat, and it's also very similar to the price response we've seen cash open to this entire space here today. Tyler, technical read here on Maxim. Honestly, everything works out the way we think. Support holds. I might like the breakout here the most.
Well, particularly because it had a negative response to earnings. Yeah. If it can overcome that, say, yes. JK, never mind, just
which is
another
an if.
week.
Which is an if.
Which is an if. Yeah, I mean, you liked it on a break over 98.50 before earnings. You have to also like it after earnings, perhaps even more, because the market has that much more information about its fundamental picture. So yes, I like this on a break.
Well, and their price response on the downside, we're just seeing this in this space today. Right. Yeah. I'm not certain that the selling in Maxim is Maxim related, quite frankly.
You're right.
Volume today is very low on, pull up volume today on Maxim. Like that's not an earnings volume day.
No, that's not.
So I'm just saying we're seeing it in the space is what we're seeing it in. We're seeing it in the space. And so just keep an eye on this on the space more than anything.
Mm-hmm. Agreed.
But if again, it's an if A then B, which is all trading is, if A, this entire space finds support, then B, you're going to have a very good technical scenario, whether you're looking at a breakout on Maxim or you're looking at, the snapback on AMD holding support, or pick your poison out there in this area of the market. There's a lot of good to like out there.
Mm-hmm. I agree. Yep.
All right, next. Oh, Tim?
I was just going to say quadruple top breakouts after 2 months of consolidation in semiconductors. If it can overcome earnings, sign me up. So I was just going to confirm. I like this.
And in a company that has a 1.97 peg, mm-hmm. that has about a 30 forward PE ratio, 36 current PE ratio, not too overextended for this space. For the market, yes. Not necessarily for this space.
Yep.
All right, let's move on to a couple little less volatile companies historically. Let's go to Visa here. Visa breaking out on the backs of earnings numbers 138 versus 126. Revenue increased 5.7 versus the 5.6 expectation. Excuse me, I said increase. That did decrease year over year at a 2.1%. Honestly, I saw a lot better numbers out there that got sold. Visa's getting bought up. What you read here, guys?
So give me the raw numbers again. The EPS
raw numbers were boring, and boring some more.
It could just be on the backs of the strength in these kind of companies today. COF is obviously having a positive response as well. I mean, out of the marketplace, XLF is performing pretty strong today. Just in general, might be getting a little bit of backdrift from that if the numbers weren't that great. Up 2%, it looks overextended. I don't see a trade here, but if you're an investor in Visa, you're not going anywhere. Obviously,
the numbers are fine for any investor. They're like, Visa's doing great. I'm just saying. Typically, based on these numbers, with the price elevated, typically you do see profit taking.
Mm-hmm.
These numbers are not, they're not, you're not looking at Visa today and being like, ooh, Google, right? You're
No.
looking at Visa today saying, oh, okay. So no, it's just something I don't see a lot, but you're seeing it in the space. American Express breaking out. You're seeing, COF doing good things today on the back of their positive response to earnings. Visa, positive response. Could be another thing like we're talking about with the semiconductor space,
Mm-hmm.
just might be seeing a little selling in the space, might see a little bit of buy in this space as well. And that
I
typically
think
does
so.
have a tendency to continue.
I think so. Yeah, I think that's what's happening here.
Yep.
Tight.
All
Yeah.
right.
I agree.
Next, let's move on. Let's go into Starbucks. The next of the typical boring. Little gap down, little Microsoft gap down action here, Tyler, on Starbucks. Came in and at a very, decent EPS number, 62 cents versus the expectation of 52. So a very decent beat on EPS. Revenue came in basically in line, but officially a miss, 6.7 billion versus the expectation of 6.8. Revenue did increase 11.2% year over year. I got boring, and still some more boring. And Tim, they tried to do the trick.
Okay.
They did.
They
They
did.
slightly increased revenue and EPS guidance within the range. They did the trick. It didn't work. What's your technical read here, Ty?
Yeah, I think it needs time to cook. So Starbucks is a very, very consistent, steady trending stock. I would peg this more as a position trading stock than a swing trading stock. So, I mean, if I'm looking to buy the dip and it carves out some kind of bottom here and gives me a decent entry, sure. Not this is just not the type of setup that excites me. Pull back, gap below the 20. I kind of need to wait.
I just don't like high bases that consolidate for a week or week and a half that eventually fell the high base for whatever reason, right?
Yep.
Whether it's an economic report or whether it was market action or whether it was an earnings response, whatever the variable that caused the reaction to fill the high base, I just don't love them. I don't love looking at them as bullish retracement candidates. I like looking at them as potential reversals on intraday analysis once support finds. And so and that goes into the needs some time category.
I would agree. And that's a recurring theme today. A lot of these gap plays just need time.
Well, again, look at Microsoft. Failed high base, break down. It's not like you don't love Microsoft. We love Microsoft.
Yeah.
But no technician loves what they're seeing on that chart right now.
I agree.
Right? Same thing a little bit in Starbucks. Let's move on to Pinterest. Pins here getting gapped down and beat up pretty healthy, down 13%. Officially a beat and an increase in revenue. Or an increase in guidance. The beats though were not Google beats. They were value beats, and that's just not good enough for a company like Pinterest. 11 cents versus the 8 cents expectation, 485 versus the 472 million on revenue. So again, officially a beat and a beat, but they're both very slight beats here. Expect a little bit more out of a company that, quite frankly, in the last year is up a good 350%. And they also increased revenue guidance, but again, a company up 350% in the last year, you got to do better than a 3 cent beat on an EPS number and a revenue number that comes in line.
I agree. 100% agree. I mean, that I love Pinterest and I believe in the company, believe in the thesis, but from a trading perspective, I mean, they've run so for a very, very long time. The pattern is now broken down. We had a messy pattern to begin with. It's not a great trading setup all the time anyway. And now we're gapping into support. Tyler, to me, this is a complete stay away until pattern develops much further.
Yeah, give it time. You'll have better odds down the road to try to do something here. And even trying to short it is tough because it's coming into big support. So it's a stay away for me.
100% agree. Let's move on to Boeing here. We saw a lot of good numbers. We saw a lot of good numbers get sold today. These numbers should have got sold a lot more. Boeing comes in at a negative $1.53 a share versus the expectation of $1.17. Revenue missed as well at $15.2 billion versus the expectation of $15.4. Revenue did decline 10% year over year. I don't have anything else to say on Boeing's
Weakening technical pattern. Tyler, is there a short there if it broke support?
If this was 2019, yes.
If it was a market to do that, fair enough.
I mean, yeah, you could map out a short here, but the whole recency bias of having been slapped every time you put your hand in the cookie jar with shorts.
All right. You know, your eyes go to those patterns. It is what it is. All right, what do you got next there, Matty?
My eye went to the symbol and it said short.
Exactly what happened.
I'm not a fan. Let's just put it like that. Spotify, Shopify. Let's do the combo next. Shopify comes in at 198 versus 72 cents. That very, very good beat on EPS numbers. That was a Google type beat. In fact, when you look at percentage beat, Shopify is actually higher percentage beat than Google is. That's a good beat out of Shopify. Revenue came in slightly above the expectation at 988 million versus the expectation of 856. That revenue shot up 110.3% year over year. Quite frankly, a very, very good earnings numbers coming out of Shopify. Well done on the quarter, no doubt about that. Technically, I understand the celebration that the buyers are having today. Technically, what you read, though?
Maybe the best chart we've seen so far, at least the most actionable. Really good number, really good gap. You took out resistance level, right? So this earnings was a catalyst for a breakout. I mean, look, what did Shopify do last time it did this? Last time it broke out, it went crazy, right? I mean, so when I look at what are the two trade setups you've seen this year on the bull side, you got one here after consolidation. This was a mess. You got another one here. So to me, I'm digging this breakout. If I had to pick one stock to trade based on the ones we looked at post earnings, based on the gap analysis, it'd be Shopify.
Yeah, and I agree. I'm looking at the technical pattern. There we are. All right. I'm looking at the technical pattern, reversal on the pivots and a breakout. It's looking really, really good.
Well, let's go to the next company that everybody thinks makes the money because they assume they have Shopify's revenue, but they don't. That is Spotify here. Spotify comes in at, they don't make money. Loss of 30 cents a share on revenue of 2.6 billion. The estimate was a loss of 53 cents, so they did better on the losing side than what everybody thought they were going to do. Revenue grew about 27%. I honestly don't have a lot of good positive things to say about Spotify's earnings numbers or their lack of revenue in general.
You know, I also read a note that they had, kind of missed on their active user data that they were looking for as well. There was some real concerns in the report. It now gapped into support. Obviously, if you're a believer long-term in Spotify, I don't think you can kind of change your thesis after this, but not a good quarter for them. Not a good quarter for them.
I would like to know where that belief comes from.
If people believe in Spotify, well, let's bring Coach Emily on. She's probably the biggest proponent. I love the company. Listen, I actually don't own it at this point, so I can't make a strong argument myself, to be honest.
It just, again, pick your poison on Spotify and Shopify here. I'm going to pick Shopify.
I would too.
100%.
Chart and numbers and the whole thing. Yeah.
No, fundamentals, chart, space, path. No, it's not even close.
Yeah. All right. Well, Matty, thank you for doing that earnings roundup.
I'm not done.
Oh, I'm not finished.
I'm not done.
What do you got?
I got two rapid fires very quickly. I just want to get Tyler's technical read. Two companies, we like at Tackle Trading. One, Boston Science, BSX. BSX reports a beat, and an increase in EPS and revenue guidance. Just technical read here, Tyler. Strength on strength, trend pattern, breakout. Now we just got to see if that gap fills or not, right?
Yes. The tough thing, think about this versus Shopify. Shopify just bottomed, breaking resistance today. Boston Scientific runs for 2 months, 6 weeks, and then gaps up. So what's the rush? I don't know. It's a healthcare stock. Yeah. Wait for it to fill, wait for the next setup. And then I think your conviction level of buying the next bullish pattern is higher in light of how good the fundamentals are.
Well, and more than anything, I want to bring up Boston Science because Boston Science was the Tackle 25 stock covered call darling for years and years and years. I know a lot of people at Tackle Trading have invested in it. Just want to bringing it up more for the raw numbers than anything. And we got to be a beat and an increase in revenue guidance. Very good company and good numbers coming out of Boston Science. NSC also we talked a little bit about, but I wanted to bring them up technically here, Tyler. They came out at 266 versus the expectation of 255. Revenue came in line. Technically, though, Norfolk breaking out of a little bit of a consolidation high base. What's your technical read?
Yeah, I mean, the nice thing here is that it didn't gap and rob you of the ideal entry. Transports have been hot. Railroads, UPS the other day was great. It's a hot space right now. Good enough earnings to maintain the trend. Looks good. Looks good. I mean, a little bit of a slower, grindy type of trend. So act accordingly. But yeah, the pattern's sound.
Love it. Now I am finished.
I love the railroads. Good job, NSC.
Who doesn't love railroads? Like
trend. I know.
Yeah,
And
just in general.
As we build infrastructure over the next 10 years, I think they got to ship a lot of those heavy things around the country as well.
Oh, yeah.
So, yep. Tyler, it is our last segment here today. And, looking forward to it on Wednesdays. We've decided to start this new thing we call Jedi Options because Tyler, number one, is a huge Star Wars nerd like I am and like Matt is, many people out there as well. And I say that affectionately. I love Star Wars as well. And Tyler is also the options Jedi over at Tackle Trading. In many ways, I crafted our Options 101 series, teaches a lot of options content in our courses and labs and all kinds of different things. Tyler, what do you got here for us today? And kind of set this up for us if you can.
Sure. So the pick is Nucor. Steel stocks have been hot. Metal stocks have been hot. Commodity stocks have been hot. Cyclical stocks have been hot. Small caps have been hot. This checks like all the boxes for what's been working of late. And it just had earnings come out. So earnings are now in the rearview mirror. Didn't disrupt the stock. Anytime a company can go from, $50 to $80 and then have earnings and they're like, yeah, it was good enough. We're not going to smack the stock. I like it. I also like, look at the EPS here. 36 cents, 63 cents, $1.33.10. What's not to like about that trend? It's fantastic. I just saw this knocking on the door of a breakout today. So from a technical perspective, that was the first thing that caught my eye. Second thing that caught my eye is I listened to the Trading Justice podcast here recently. You guys just did an expose on implied volatility. Matt, you interviewed Tim. He had some really good comments on how to use implied volatility in the trading. And I thought Nucor was a pretty good example to illustrate the principles you guys talked about in this week's podcast.
Well, I'm glad you listened to the podcast. Number one, I'll make sure I go grab the link real quick and drop it in for anybody who did not. And yeah, we did have a discussion on how implied volatility post earnings works. After the crush, you usually will get a build back at some point. And right here on that Nucor chart, like you're seeing down on the bottom, using the implied volatility tool, you can see that Nucor's options are relatively cheap to where they have been historically. Yep. And we are post earnings right here. So we had the crush.
Well, and you also with the low point it made post earnings, you also kind of have a feel that you're at the bottom end of the channel for this time frame too.
Mm-hmm. Mm-hmm. Correct. All right. Correct. And so the signal then is options are cheap. You could try to sell a naked put or a bull put, but you're not going to get paid that much. And so it's not as attractive. What is a little more attractive then is trying to capitalize on this breakout by buying options in some fashion. Now, because I'm bullish, I want to buy calls in some fashion. So the two strategies that I would compare here are just buying a straight call option. That would be like your +3 aggressively bullish, simplest trade. And then the second, we'll be doing some type of call spread, which is more of a compromise, more of a +2 trade, where you're trying to reduce the cost a little bit. Mm-hmm. So the nice thing here, because the options are cheap, I'm not going to have to pay as much. Thus, my risk is going to be less. These are going to be debit trades, so the risk is what we pay. IV being low makes the pay cheaper. So, first of all, the other thing I like about Nucor is it's got a good history of rewarding breakout traders, breakout buyers,
especially recently.
Yeah. And we're on the verge of completing a month-long base. You take a look at the long-term chart just real quick.
I was going to say, put that on a weekly. You're going to like it.
Yeah, all-time high. I mean, again, what's not to like? And this space is in fuego right now for from a sentiment perspective. Everybody loves the space. So, okay, so if I'm going to buy a call, that's going to be trade one. I kind of like the idea of buying a slightly out of the money call. That'll make it even cheaper. And so I went to June. May's a little too close for me. So I go to June, gives me about 51 days. And I was looking to buy the 82.50 strike. Pretty good liquidity in these two. Bid-ask spreads relatively tight. So 340 by 360. So going to cost me about $3.50, which on an $80 stock ain't bad. It ain't bad. You're getting 50 days. You're paying percentage-wise maybe 4% of the stock price to get an upside bet. So if I look at the risk graph on this, the graph's, it's fairly straightforward. It's a hockey stick. My risk is the 350. My reward's open-ended. And even if this just pops, let's say this just runs to $85, right? Not even that far. A push to $85, and you made a 50% return. So because the call is so cheap, it doesn't take much profit to generate a really high ROI. So just a push to 85 in the next couple of days, if it happens, you're talking a quick 50% return, let alone if you get a decent upswing, right? Let alone if this thing pops to 90 or something. So I think the risk reward's great on a simple long call, looking for a break over the high here. And in terms of stop loss, you could do a tight stop under the 20 MA, or if you wanted a little bit of a position trade, you go a little looser. But that's kind of where my head's on the first one.
Okay. So Nucor here, obviously, I mean, just to confirm your technical read, I love the chart. I think everything you just analyzed on the chart, I am 100% behind your analysis. A month-long consolidation, potentially into a breakout, great sentiment behind the space, earnings last week, so that's in the rearview mirror. And by the way, bought up after the earnings report, so the initial response wasn't that great, wasn't that positive, but now here we are threatening into the breakout. So buyers came in despite the earnings reaction, which was not bad, but off a little bit, and now we're pushing up higher. So I like that there. I do like the technical read. So going into the trade on the call option, a straight call option is simple, and if you are going to play a straight call option, you actually do need to be that option Jedi, knowing what kind of premium you're paying. Because at this point in the volatility cycle, you're getting a cheaper variation of the option. Now, time decay will still negatively impact it, but as the implied volatility either settles or builds back up over time, which I think there's an edge towards that coming back into its mean, that can at least offset some of the time decay volatility. On the risk graph, you're open-ended now. So call simple, right? Long call. You own the rights to the underlying equity, 100 shares per contract. At any point at or before June, you can just sell that call back to the market and lock in a profit if it does materialize your profits. So the simplicity behind it is really the beauty here, Tyler, that you're getting it where you're paying for volatility. So I do like it. Matt, any thoughts just on the simplicity of the call first?
Yeah, Tim, I absolutely love this trade. Tyler's right. The space is hot. You got a good technical read. It's a clean pattern with a clean breakout with momentum building over the last 2-3 days, whereas the market in the last 2-3 days has done what? It's
Nothing.
a snooze fest.
Snooze.
It's literally a snooze fest. It's doji, nothing. Lots of news, lots of activity in the market, but the broad market's been a snooze fest. And so you gotta like Nucor's price action coming into the potential breakout. I don't think you're coming from too far of a distance to be overextended on the type of breakout. So yeah, I do like it where volatility is. I think buying a call option makes a lot of sense.
Mm-hmm. So what are we comparing it against then, Tyler? Because that's the fun of this one, right? Is we get to take a look at two different ways to play it.
Well, so the one negative you hit on with buying a call is the time decay factor. So I'm capitalizing on the cheap options. I'm capitalizing on the fact that IV could go up, but I'm suffering the negative theta. Well, what if I could make this a spread where I capitalize on the cheapness, I capitalize on IV maybe going back up, and I profit from time decay? if the time decay is a big hang up for you, not wanting to suffer that, because, we're not buying a 6-month call. It is a June call option. There's a decent amount of time decay. So what I could do to mitigate that risk, as well as reduce the cost even further, is sell a short-term out of the money call against this. And so if I come into the option chain here, I could sell maybe a May further out of the money call. So I bought the 82.50 for June. Maybe I sell like just a May 20 delta. Okay. Pick up 70, 75 cents. That'll reduce my cost almost 20%. And at the same time, so cost goes from 350 to about 290. At the same time, my time decay is now going to be positive. So what this does is it turns it into a bull call diagonal spread. It does cap the upside. Mm-hmm. But the profit is still going to be, substantial if it can get up towards, 80, 87.50, that short strike. So that I think would be the way. Here you can see now the theta is more neutral instead of negative. That's the way I would fix it if I was wanting to be a little bit less aggressive and maybe have a little bit better risk.
What's the profit at 85 at your target? So it's about half.
Yeah, it's $82 on 290. So, yep.
Which I'm assuming risk would be cut in half as well.
Yeah.
Okay.
Not cut in half, but I don't know, what do we cut it? 25% or so.
Yeah.
What you thought, Matt? I'll share mine first if you want. I like the long call here, guys, out of the two. I completely understand. And I love that you brought up the price slices to look at the difference between how these Greeks would work. Turning it into a positive theta trade, I'm not going to criticize any trader for ever wanting to do that. That means time is benefiting you, not hurting you, right? If that's your instinct, if that's your style all the time, to want to try to find those types of mathematical edges, I would support it. High five you on the way into the option trade. Vega here would still benefit you if you get the implied volatility build. So going back to the analysis we had from, the idea behind the podcast on Monday, the vol build, vol crush, vol is so cheap right now post earnings. It benefits both of them, but I'll tell you why I choose long call for me personally, Tyler. I love the technical pattern enough to be willing to go +2.
Yeah,
on the aggression.
Well, I think by selling the call option, you're not mitigating enough risk versus the return. And quite frankly, I expect volatility to stabilize and build, which means selling the option's not going to benefit there. So you're not offsetting as much of the cost as you probably want to. You're not offsetting as much risk to justify giving up that much return. Yeah. So no, I think where volatility is in the technical pattern, sometimes the simplest answer is the best one. And buying the call option here, I think, is the simplest answer.
I agree.
And the best.
And that's the lesson here, I think, today is that sometimes the simplest answer is the best one. Just exactly what Matt just said. For me personally, I think it is the call. Tyler, which one would you lean towards? I know you're presenting two as a part of Jedi Options here to always give two choices, but which one do you like?
I like the long call. I think one of the other factors we don't talk as much about that might go into my thinking here is, what does the rest of my portfolio look like? Like if I already have a bunch of cash flow trades on, I like to mix it up. And so I'd lean towards the long call. If I had a boatload of long calls in the portfolio anyways, or already, then I'd probably lean towards the bull call diagonal. But in a vacuum, just all by itself, I like the long call.
Sure. I love it. Another fun edition of our Jedi Options segment. Now, I love going into risk graphs and talking Greeks and looking at those, characteristics, comparing them back and forth. It's one of my favorite things to geek out about.
What I love doing is I can't wait till we're out of earnings season and Tyler's doing Jedi Options.
Yeah. Condors, butterflies, all kinds of stuff.
The reality is, when you're in this environment when there's just not a lot you can do outside of like short strangles from an option perspective on earnings, which takes a lot of advanced skill set. This is a lull in the market for a lot of traders. I mean, Coach Frank talks about this all the time. I hate earnings. How many times have you heard Coach Frank? I hate earnings season. I don't even want to get out of bed. It's earnings season, right?
Did he say he was taking the week off for this?
Yeah, literally, I think he did take a vacation, like the biggest week of earnings. And Frank's like, I don't care what happens to Microsoft. You guys talk about Microsoft and Apple and Amazon. I'm going to go fishing is what I'm doing. So I love it, Tyler. I do think the call option makes a lot of sense on Nucor on the breakout. But I am looking forward to those conversations we have where we have all these other stocks we can start breaking down this type of information on and strategies.
Fantastic. All right, guys, that is our show here for today. One last thing Tyler had asked me to bring up is the Amazon rumor. It's got a little juice behind it here, Tyler. It's all over the wires lately. People are hinting at that stock split. No confirmation yet, but a couple of different reporters have been talking about potentially Amazon announcing that tomorrow. It's got enough juice to getting Amazon up near
like, is this the juice like the Jaguars are going to take Trevor Lawrence, or is this like the Dolphins are going to pick a receiver? Like,
it's
what juice
more
are we
like
talking?
the Dolphins, because we know the Jaguars are going to pick Lawrence.
Okay,
we
okay,
don't know who the Dolphins are going to pick. So more like the Dolphins there.
You know what? There's a lot of fire. There's a lot of smoke out there right around earnings. At this point, I'd be a little surprised if they didn't do it.
It seems like that's where the edge is. If you're setting a line,
you can't hit like this, then not do it. We've been waiting on an Amazon split for 10 years. Like, you can't hint at that.
Rumors on what the level of the split would be?
See, the only conversation Mark wants to have is how much do they split?
That was going to be my question.
Well, I made an argument for 100-to-1 split in a private conversation yesterday.
That would be. I'll take a 10 for 1. I'll take a 10 for 1.
I'm gonna start it at 10 for 1. It doesn't make sense unless you get underneath certain price thresholds.
I would love
it. If you look at the top, I'll do an article on this on Thursday's Options Theory blog. But if you look at if the target is to try to get to where you can be in the Dow's price weighted,
that
so you
is
got to
the
be under a
target.
certain price. Yeah. So the highest price stock in the Dow is UNH at $395. Goldman at $350,
which is 10 to 1.
Which is 10 to 1.
Okay.
So
also think about it like this: Apple, when they were 680 pre-split, what they split 7 to 1. They wanted underneath that triple-digit $100. They went down to 92.
Yeah.
So I think you're in. I think you're in, and this is going to get Mark excited, and I know it is. But I think you're in the zone to split fairly aggressively here. Amazon's not been a company to split, right? They don't do that. Yeah. And so I do think we're in the face of a much more like a Baidu 10 to 1 split than we are, or an Apple 7 to 1 split than we are those standard 2 to 1 to 3 to 1. I don't think it makes any sense for Amazon to split 3 to 1. Like that makes no sense to me.
100% agree.
So you're going to go down to a $1,200 company? Like, so who cares?
Yeah, it's true. That's
it's the same conversation we'll have.
Yep.
You got to get underneath that $500 price point for Amazon, which means you're arguing for the Dow. I think you're talking 10 to 1 here.
Mm-hmm.
And I have not read one article on this. I saw a tweet, and then Tim talked to me about it, and I'm like, yeah, it makes sense, but it only makes sense for me if it's like 10 to 1. Like a 2 to 1 split makes no sense.
Anything over 10, I'm happy.
Tim, to you and Mark yesterday, I made the argument of 100 to 1 split, and it made sense to you guys. You're like, please, okay. They're not doing it. I was kidding around when I made the argument. But a 10 to 1 split does make some sense here for me.
It'd be interesting to see. We do have some smoke here. Probably the announcement, if it's going to happen, will be around their earnings report, and we'll talk about that in a little bit. Mark, I got to bounce here, guys. Sorry, Matt. Yeah. Go ahead.
Oh, I was just going to say, what was Tesla's split?
Tesla did. Now I'm trying to remember.
5 for 1?
Was it 5-1?
It was 5 for 1,
or was it 7?
Okay,
I think that's Apple.
And what price threshold were they trying to achieve? Under 500. So. Again, I think Amazon's in the 10 to 1.
Mm-hmm. Mm-hmm. It's going to be interesting to watch. Final thoughts. Let's get yours, Matt. Anything you got for the team out there?
No, I just gave a random weird prediction of 10 to 1 split on Amazon that I have no information on. So that's all my information. Those are my final thoughts.
I'm just excited to see if they do split. Hopefully it is a big one if they do. Tyler, final thoughts.
You mean an Amazon split at 10 to 1 and Kyle Pitts to the Dolphins?
That'd be a great Thursday. That would be a fantastic.
That'd be a fantastic Thursday.
I'll defer to Mark for my final thoughts. I'm sure he's going to reveal a guest judge that I'm so excited about.
I got tonight. We have Trading Lounge at night, 8:30 Eastern for pro members, and Trade Masters at 7 p.m. Eastern here on the Tackle Trading YouTube channel. One of my favorite shows. Seriously, I enjoy it, and I normally host. I can't be there tonight because I have a children obligation with a sporting event. But Tyler, who has been the guest for several weeks, is going to be the host and judge tonight.
I feel bad for the contestants.
So Tyler, it is going to be your trade master tonight. We got Greg Holmes versus our returning champ, Jake.
So now Jake, who just beat Tyler, is going to have to
This
pitch.
ain't
Listen,
good.
I'm
This ain't
already
good.
feeling my judgmental
This
self
ain't good.
coming to the fore here. It's going to be great. It's gonna be
Tyler,
great.
you're gonna have a hard time getting that crown off Tyler's head after tonight. Like he was
Yeah,
born
Mark,
to
you know what?
judge.
Take the rest of the year off. I got this, buddy. Don't worry about it.
It's 7:00 Eastern. It's one of our favorite things we do here each and every week. Trade Masters will be right here live on YouTube. And one quick note, Benjamin just joined our pro membership, a new member of our halftime crew here, talking in the chat all day.
Welcome, Ben.
Great to have you, Ben. Hopefully see you in those lounges.
Welcome
tonight.
to the team, Ben.
Great to have you. All right, guys, we're done for today. We'll see everybody back tomorrow, same time, same station for the halftime report, and tonight on Trade Masters. We're out. Have a wonderful day.